Hello, everyone. Please mute your microphones if you're not trying to say something. As there are still some people joining in, I suggest waiting 2 more minutes and then we can begin. Okay, so I suggest we begin. Once more, I would like to ask everyone to mute their microphones if you are not speaking. Yeah, let's start. So, hello everyone. My name is Tomas Milašauskas, and I will lead the first part of this presentation, basically introducing the results of first Baltic private equity and venture capital market overview for 2010-2019. The results of this study are based on responses of 24 Baltic fund managers that participated in this survey and whose contributions made this analysis possible. Thank you all. This report was prepared by Deloitte Financial Advisory Team, which specializes in M&A advisory projects, and in particular, buy-side and sell-side process organization, business relation, and financial due diligence projects. Okay, let's move to the other slide. So, this seminar will be split into the 2 parts. First, I will present the key findings of the study. And in the second part, we will have a panel discussion in which we will have 3 representatives from different Baltic countries, from the private equity or venture capital funds. From Estonia, we will have Christian Kalda. From Lithuania, we will have Rokas Pečiulaitis. And from Latvia, we will have Normons Igolnieks. We will also have Rene Kusak from Deloitte Estonian office and Jānis Zenis from Deloitte Latvia, who will moderate the discussion. My presentation will cover 5 key aspects that basically define private equity and venture capital market in Baltics, including funds raised by Baltic fund managers, capital available for investments, fund investments, funds portfolio companies, and exits that being done by funds. Due to the time constraints, I will focus mostly on overall Baltic picture, while for country-specific details, I suggest to use your option for questions and ask panelists for that during the second part of the webinar. In case you would have any questions during the presentation, I encourage them to write down in the chat, and we will try to cover them straight after this presentation. As private equity and venture capital funds operate in private markets, thereby by definition are many blurry lines in this market. Therefore, before going to discuss the numbers and trends of this market, first I would like to define what we considered a private and venture capital fund in the context of this study. So the PEVC fund in this report is a fund that has a fund structure, meaning that there are limited partners who invest the money in the fund and for the specified period of time. And there is a general partner or a fund manager who do a professional management of the funds raised. This definition specifically exclude some of the family offices that are sometimes managed with fund structure. It also exclude investment holding companies that manage a portfolio of businesses, as well as publicly listed investment funds. This definition also exclude all non-equity investment vehicles, such as debt funds or funds dedicated to real estate investments, such as office space, residential real estate, land, forest, and all other funds that invest in assets. So without further ado, let's jump to the study results. And as you can see, since 2010, Baltic private equity and venture capital has demonstrated a rapid growth with over 1.3 billion of new capital raised. 2019 was a record year with almost 0.5 billion raised. Over the past 4 years, amount of funds raised increased threefold from 400 million to 1.3 billion at the end of 2019. The growth was broad and covered all main categories of private equity and venture capital market, including buyout category, growth investments, latent venture capital investment. Almost 1 billion of the capital raised was raised by funds focused on the whole Baltic region, meaning that majority of the funds see this region as one investment destination and usually cover all 3 countries. Half of the Baltic focused funds were buyout funds, and about 20% of 1.1 billion were investing in growth companies and looking for growth investment opportunities across Baltics. While in late venture capital investment fund sphere, there were much more nationally focused funds who define their investment geography as one specific country. The total amount of these funds that are focused nationally were 300 million, and 37 million were focused on Estonia, 117 million were focused on Latvia, and 148 million were focused on Lithuania. Most of those investments, most of nationally focused investments were in early and late venture funds, and basically this is a result of national development programs that each country is undertaking. At the beginning of 2019, Baltic PE/VC landscape had 36 active funds, and during 2019 alone.
Thomas, I'm really sorry, but I get several notices that quite many people are not letting in by Zoom, so I'm trying to reach our host, Rimas. Rokas, maybe if you have his mobile or something, you can call him. Oh, now I see that many people started to let in. Okay, sorry. I'm very sorry for disturbing.
So
So
how,
now everything should be fine. I see that we have an increase in number of people. Thanks. Sorry.
You can always use the chat function so you don't disturb, I think, Thomas.
okay. So in case I missed something, no problem. We will be publishing the report today. Yeah, so we will be publishing report today, and all the results could be read starting from the beginning and in much more detail than I'm covering here. So as I mentioned, during 2019, we had 14 new funds established, and they were established across broad spectrum of investment strategies. 6 of the funds were established to focus on early venture investments that usually focus on large number of relatively small investments ranging from 5,000 to 300,000 euros. 3 funds were established with late venture investment mandate, where typical investment is in the range of 300,000 to 2 million. 3 funds were established with focus on growth investments, and 2 funds were established with buyout mandate. 2 new funds that were established with buyout mandate were raised by Inval Asset Management and Baltic. And the funds raised 142 and 126 million respectively. Those are the 2 largest ever funds raised in the Baltics, and this is really a milestone for the whole market. Another milestone in the market was JB Nordic fund that was also raised in 2019 and is co-managed by Baltcap. This was the largest ever venture fund raised in Baltics. They specialized in late venture companies, but the size is more in terms of Baltic context in the buyout fund category. Out of 14 new funds that commenced their activities in 2019, 8 were pan-Baltic funds, while 5 were Lithuanian-focused and 1 was Latvian-focused fund. There were no new funds that focused only on Estonia, probably due to lower number of government-funded early-stage venture capital funds and accelerators. So 1.3 billion is a lot of money, and probably the natural question is, where did this money exactly come from? And the answer is, well, for the most part, till in the foreseen period, it is from governmental institutions and national and multinational development institutions, such as European Investment Bank, European Investment Fund, European Bank for Reconstruction and Development, and the national development institutions such as Invega, Altum, and Credex. However, as you can see from the circles on the right side of the screen, in the past years, among fund investors, we see much more corporate investors, pension funds, and private investors who are apparently starting to see Baltics as an attractive investment destination, and in particular, Baltics private equity and venture capital market. Okay. So the sharp rise in funds and relatively modest amount of investment by those funds in 2019 resulted in rapid growth of funds available for investments. It's basically funds that could be deployed by fund managers at any, well, with relatively short time into the portfolio companies or into the new targets. In the last year, there was a broad growth in capital available for basically all investment categories, doubling only over the past year. This is probably most interesting statistics for business owners across Baltics, as it shows how much actual capital is chasing limited number of investment opportunities. And the higher available, the higher the chance that the business owner who is considering letting in an outside capital will get a fair valuation for the shares that he sells. Furthermore, the higher the capital available, the higher the chances that among the different funds, the business owner will find that one specific fund that will help to unlock the business growth potential. As in many cases, funds bring not only capital, but also very specialized expertise and contacts that help to accelerate the business growth. Two categories that have seen significant changes in 2019 are buyout category, where 200 million plus funds were raised, meaning that now we have local funds that can target 10, 15 million investment ticket companies, or the ticket could be up to 15 million, when previously, due to some basically risk and diversification constraints, most of the investments were below 10 million. The second category that showed significant development is early venture funds that have started pouring money into the promising early venture technologies companies through the accelerator programs. And the number of funds in this category increased the competition, which in turn forced new funds to deepen their specialization, to invest in specific topics, to specialize on industries. And we have the funds that focus on fintech, that focus on software as a service, and which in turn resulted in boom of new startup investments. The fact that vintage of majority of funds is less than 3 years, and that majority of the capital raised, which is now in available capital now is in excess of 800 million, sends a strong positive message for the business development opportunities across Baltics and perhaps the beyond. Below, now, when we basically see how much of the capital is available for new investments, let's see what fund managers did historically with this capital that they raise. So funds activity in terms of performed investments was also very high. In 2019, a total of 91 million euros were invested, which is just slightly below a record high annual investment amount observed in 2017, which was 96 million invested. Throughout 2010-2019, consumer goods and retail was by far most popular investment sector, with a total of 86 million invested. However, in 2019, with increasing number of early stage venture capital funds focused on fast-growing IT and internet companies, computer and consumer electronics sector became the most popular sector, and in total attracted 24 million euros out of 91 total invested during the past year. Annual investment amount in Estonian and Lithuanian entities in 2019 was at record high, 42 million and into 46 companies and 32 million into 47 companies respectively, while it was less active year for funds in Latvia, where was a total of 13 million invested in 2019, and this 13 million was split into the 74 companies. In Latvia, the largest amount and largest number of investments were made into the early stage venture capital category, while in Lithuania and Estonia, largest number of investments were in early venture category, while the largest volume or the amount invested were in the buyout category. As average ticket size in this category is much larger. The largest amount invested during 2010 and 2019 were by Baltcap, which in total invested 156 million euros into the companies across Baltic. And Baltcap was followed by Livonia Partners funds, which invested 59 millions over the same period. The largest number of investments were made also by Baltcap, which invested into 55 companies. And the second fund that did second most investments were Commercialization Reactor with 49 investments over 2010-2019 period. Baltcap and Livonia Partners were most active investors in 2019 in terms of invested amount, with 27 and 17 millions invested respectively. While the largest number of investments in 2019 came from Commercialization Reactor and Startup Wise Guys funds, with 37 and 27 investments respectively. So as you can see from the number of companies in the early stage, in the early venture category, over the last year, the number of investments almost doubled as compared with the whole 10-year period. So this is really a boom of startups. The largest investments in 2019 were done by Invalda Asset Management and Livonia Partners. Invalda Baltic Sea Growth Fund bought a controlling equity stake in metalworking industry, an industrial construction company Montuotojas, while Livonia Partners acquired Semester and an Estonian-based export-driven glass processing company and 60% equity stake in Fenersta, a window manufacturing company. In 2016, Baltic fund managers also started to invest outside Baltics, and this is a new trend that we have not seen in such a volume before. And as of 2019, cumulative amount invested abroad were 47 million, and the sum was spread across 49 different companies outside of Baltics, majority of which concentrate in Scandinavian and UK, in Scandinavian countries and UK. Some of the most notable investments are Baltcap investment of 6 million euros in Swedish transport company Enride in 2019, and while asset management investment of 5 million euros into Moldovan Agrobank in 2018. Now a few words about the total fund portfolio and how does it look like. So as of the end of 2019, funds across Baltics had 309 different portfolio companies, which in total generated 1.5 billion revenue, had 16,000 employees, and paid almost 130 million euros in taxes. This year in the survey, we also measured male-female composition of the boards by funds portfolio companies, and sadly, results show that only 13.5% of all board members are females. This is an indicator that we plan to analyze in our further studies, and we hope to see significant improvements over the next years, as we have a quite low baseline today. In 2019, Baltics funds divested 25 million worth of initial investments into their portfolio companies. This is also one of the fastest growing categories that we analyzed, as it had a relatively low baselines. as across the Baltics, we don't have that much funds who already went through full fund life cycle, meaning capital raise, then investments, then management of the funds, and then exiting the companies. However, we have already some companies that are successfully divesting their portfolio companies, and those funds apparently earned their trust among investors and are raising new funds already. Largest divestments last year were made by Baltcap and Lit Capital. Baltcap sold 95% stake in Fitech Holding to a leading Europe's fintech company, Unified Post Group. Baltcap also sold a 70% stake in Inmedica, domestic chain of primary healthcare centers, to Inval Baltic Sea Growth Fund. As you can see, there are two funds involved in this transaction, and this is a historic event when basically the first secondary transaction in Baltics takes place, where one fund buys an ex-investment of other fund. Two other largest investments were sold by Lit Capital. One of them is Šiauliai-based bicycle manufacturer Baltic Vairas to a fund operated by JKJ Management. And another is Medicinos paslaugų grupė, which was sold to Affidea. So this is it for the introduction. I hope there's already a line of questions, and I suggest we go through them and answer them. So I don't see the chat anywhere. Do we have any questions?
Not at the moment.
Okay, so then I suggest moving to the second part of the webinar, where Yanis will be doing some round of questions, and we'll be waiting for questions from the audience, because it's a really good chance to ask this industry-related question, as we have representatives from all three countries that really know this market well.
Thomas, can you hear me?
Yes.
Thank you very much for providing an intro. Before we kick off with the panel, do you wanna ask those quiz questions maybe, which we can see the answers afterwards?
Okay, so we have a couple of quiz questions. Maybe someone could put them on the screen, and we would then let the participants vote. Yanis, do you have those questions?
Yeah.
So please share those on the screen.
Do you see my screen?
I have shared them already. They should be seen. Do you see the questions?
I don't.
No, not yet.
Okay, let me check once again. Thomas, have you stopped screen sharing? Maybe that could be.
I think
Oh,
so.
now we can see.
Great, super.
So we have two questions here. One is, and essentially for those who have dialed in via an application, on the top of it you can see view options, and if you click on the view options, then you can essentially vote on which of the answers you would prefer. Paulina, what was the click you had to
Yes.
click under the options?
So basically you need to go under the view options. Then you see annotate. That's a bar annotate. And then you can choose whenever stamp you like and stamp it on the question, on the answer. This could be working only if you joined through the app, not through the web. So you will see an annotate under the view options if you have joined through the application.
So the first question is, over the next 12 months, which stage do you believe will see most new investment opportunities? Is it a startup stage, mid-sized growth companies, or a market leader? Here you go.
Okay, looks like we got the results.
Yeah, so it seems like that the majority is thinking on the startups, that's the one where the opportunities, most of the investment opportunities will lie. And a little bit in mid-size and nothing in market leaders there. Paulina, is there a difference between the tick and the heart? What does the heart mean?
No, it's just you can choose whenever stamp you
Okay.
like. So
All right.
someone chose the heart, but anyway, you can choose whatever
right.
you like.
And then you have one more question, right?
I'm trying now to move the slide.
People still loving the startups.
Yes.
So the second question says, what type of activity will we see more of for the second half of 2020? Is it a divestment of non-core assets, potentially to salvage value? Is it an investment at a bargain to accelerate growth? Or is it an increasing valuations due to higher competition among local fund managers or other investors? So is it divestment? Is it investment at a bargain? Or is it investment due to increasing valuations? This one is interesting one, yeah, because really there are differences in opinion. Non-core asset divestment seems to currently at least be the front runner. Although some investments the bargain. 6 non-core asset divestment, 4 investments the bargain, and 2 increasing valuations due to high competition. I guess those stars up to which are above the number A, we can attribute to number A as well. So divestments non-core, 9, 5 investments at the bargain. All right, I think taking into account we're limited in our time, so what can we conclude? It's startups and non-core assets that will be a focus for the future. But let's get to the chase. We have 3 panel speakers on the line. We have Norman Sigalnieks from SZGI Capital in Latvia. We have Rokas Pekulaitis from
Hi, everyone.
CB Ventures in Latvia. Hi.
Lithuania and Contrarian Ventures. Hello.
All right, Lithuania. Sorry, Rokas. And then we have Christian Kalda from Baltics in Estonia.
Hi.
Hello, gentlemen. So we're going to do two things, I guess. We'll run through a couple of questions that we've prepared based on the results we've seen from the survey. But please do post your questions, and I'm referring to audience now. This is the time to ask your questions if you have any at this point in time, and get some interesting answers from the industry and from the experts from the industry, I would say. But let's kick it off while people are posting their questions. Let's start with a couple of ours. So obviously, this is what Thomas began the presentation. There has been a massive growth in available funding and overall funding for PE and VC. Especially in the last year, 2019, we've had more than 60% of growth in capital. So in total of 800 that what we've seen. What are your thoughts? What are your thoughts on the reasons behind and the triggers behind this growth in the recent years? And I guess everyone can give answers. And my apologies, we have Rene Husik as well from Estonia participating in this conversation. So what do you think, guys? What are your thoughts for the amazing growth in the recent years in private equity venture capital field?
I think I can kick off with a brief, probably intro. I think given that we invest in early stage, I think I have more probably reflections on that side as probably other participants in the call. But I think primary driver, I think there's some sort of a multiplier effect already happening. I think mostly predominantly in Estonia as well as in Lithuania and Latvia, from already existing founders that successfully exited their companies or reached status, what we call in VC of $1 billion, a unicorn type of status, which showed some success stories which both did well for internal and external. And what I mean by internal, so probably more founders coming in and founding new companies, and again, more venture capital being locally deployed, but also what it did for external, it helped to attract the attention of foreign investors and foreign funds. I think there's two things happening. Both predominantly the Western European generalist funds are taking notice, and we've seen some great names both in Estonia, Lithuania, and Latvia entering and participating in later stage deals. And there is a clear syndication happening of early stage deals being mostly executed by local funds, some of them already seeing new players coming in from foreign countries, but also the continuity of funding coming in from foreign countries, and that obviously spurring the growth in these companies and putting ourselves as the Baltic states on the map. So I think on the early stage, there's some great development, given that we're very nascent in early stage ecosystems, all together 3 countries. There's been great growth and potential already unleashed. I think, putting us as an epicenter and an interest of a lot of different investors, both from European and also foreign countries like Asia as well as US. So just a short mind to that.
Agree. Okay. With the previous speaker, also I would like to add the factor of the government institutions, which were very active in launching different funds. Also, by the way, acceleration funds, which is turns out that in many investments, as previously were mentioned. So basically, this also drives a new participants, new private equity, venture capital companies. So this drives growth, in my opinion.
Hi. So maybe I would like to start with thanking all of our general partners who took the pain to actually fill in this huge questionnaire. So I can promise you that next year it will be much easier because we already have a history. And I also want to thank Deloitte for big work you did for this time. So we know we are not perfect yet, and there are many things that we need to argue and go forward. But this is the first pan-Baltic statistics, so I'm very happy that we finally have it over the years. But what concerns the growth, I can add only just a fatalistic view that in Finland this kind of growth or boom happened in 1990s. So and in some other countries like Singapore, it happened even before. So it finally had to come to the Baltics as well. So and I am happy to see that it is across all investment strategies. So we have many more growth funds, buyout funds, and obviously venture capital is our brand that makes us visible.
Okay. With regard to the point of the survey, Christian, you're right. I mean, this is the first year we've done it for the 3 Baltic countries with one methodology, with one questionnaire, one data set, and with comparable amounts. I think last year it was done quite separately. And to be honest, when we started this, obviously we're thinking like that. We, compared to how we thought last year that we're going to do 3 countries and then let's see how we'll prepare. But what we found out that a huge amount of funds that is available for all 3 countries are essentially deployed or could be deployed and have been deployed across all 3 Baltic countries, which makes us wonder how combined or how homogeneous is the Baltic market for private equity and venture capital. Maybe Christian, you and the rest of the guys can share your thoughts on this.
I can just start with one thought to it. I will be devil's advocate and say, if we were from a funds perspective, from a GP perspective, we're a startup, we're probably still at the seed stage. Because if you look at everything is relative in terms of growth, right? If you grow from 1 to 2, that's 100% growth. So we're still very much a small player in European context from like a GP perspective. I think you mentioned it right. Like what if we take it to a next level of context? How long when was the first fund that was created on, let's say, on the back of EIF? That was relatively just 10 years ago, right? That's just the span of the one fund deployment. So majority of the funds are going through first or second fundraisers, and that's really sort of a product market fit, what we call in venture capital establishment, where we see, whether we'll be able to compete with the returns and go out of the zone of, government money versus private money. Which really proves if you can be successful in this business. And given how long the private equity and venture capital feedback loop is, it's really, the answer to this question is really too early to tell. And in some instances, probably Baltcap is the most probably oldest and biggest firms out there are already having these feedback loops. And I think results are pretty great. And that puts us again on the interest from LP side to be interested in this particular reasoning of entering and investing in the Baltic states and Baltic managers. So I think this is just my devil's advocate that we're very early stage yet to tell something, and we're good on a good path, but there's just a lot of work to be done, and we need to make these numbers 5 times bigger to be relative, even on the I think region level. So this.
Maybe I can add here that I have done the Baltic business from 1990s, and I cannot see how, if I take just Estonia, how a country with 1 million something population can be any entity that can alone actually draw any attention. So for me, the Baltics is the minimum entity. And I would be very happy if we can continue even strengthening our relationships and the joint marketing, so we can be kind of forerunners for a Baltic region. And actually, the next step for us would be that Rokas also knows, we just had a brainstorming on the new Nordics, whatever we call it, but to market the Baltics also to limited partners outside. So I can see it as a only natural way forward to look it as one market.
Normunds, anything to add?
I thought we have fourth participant also speaker, no? but
we have a special question for them, which is very related to this.
Okay, but actually, also agreeing on previous speakers, just want to add that that actually also these sort of fund setups allows us to invest in the Baltics, because our previous funds were not allowed even to invest outside Latvia. So for example, we did our first investments in other Baltic countries, and just from our micro perspective, it shows that this development is happening.
Okay.
And I think to add to that, I actually have one point as well, which I think is very close to what Norman's just said. You know, can let's say the Baltic countries deployed 5 billion if we had, let's say let's say maybe buyout, it's easier a bit, but really in venture, right? There's a limit growth to if you limit yourself to a country ability to invest in a specific country, right? So if we are just to get a mandate for Lithuania, I would never take to manage that fund, because I think it's really hard to make returns from a diversification point and other things. So I think that the perspective of LPs being more flexible thinking, and I think in more of the government LPs, right? I think they should be thinking of founders that are based, and entity where it's based is really, I mean, it's important at the early stages of the company, maybe for the governments, but reality is these companies are always going to be Delaware corps, unless we have a big amount of capital to follow on that on growth, as some countries like UK or France are doing, focusing only on the winners, on the big companies, rather than on like early stage companies. And ability to be more flexible within geography is a very core important element, because geography should never limit the growth of the company, and it should be based where it should be, where it's the best to execute business. And I think this has been, I guess, coming from European Commission and other things, that, you know, limitation has to be on certain region, but I think that with flexibility is the name of this game, and to really be competitive and be able to, you know, make decent returns on the market standard to be at top quartile, you need to have that flexibility. So I think this has been, again, devil's advocate, that we need more flexibility, and I think this is what the Baltics next need to grow into a big ecosystem, and both to make the, you know, LPs make return and GPs to be a successful managers.
All right, thank you, Rokas. Renee, quick question to you. Considering your London experience back in the day, now you're back in Estonia. You know, how would you describe the differences between private equity and venture capital markets from, you know, any angle you would pick, I guess, between London and the Baltic states?
Sure. I mean, I think in general, they're obviously very incredibly different in nature. I mean, you can't even compare the number of market participants, deal volumes, etc. It's a completely different landscape. But I think, you know, we sort of talked about the international point and the sort of globalism. You know, looking at the Baltics as a whole, I think that's something that is sort of, you know, we've seen that trend since 2016, and I think that's something that will continue as well. And it's sort of a similarity that we can see between, for example, the UK as well, where actually, if you look at most of the activity that takes place, it is sort of at an international scale, where there's UK private equities investing abroad, but also companies abroad investing in the UK. And I think that's in the sort of first half of the decade in the Baltics, that's been fairly limited. But I think we're starting to see more of that. I think if we look at the number of investments at the moment, about 12% of them are actually sort of outside of the Baltics now, and I think it'll only continue to increase. And you know, I think it's only natural, because the Baltics, as everybody's already mentioned, are a very small place on their own. So we need to look at this from a sort of wider perspective as well.
That's a very good point, maybe to ask Christian and Normans, and what are your thoughts for your funds, or what you've heard in the market. You know, how likely it is that we will increase our investments, meaning Baltic private equity, venture capital funding across the borders in the wider region, or maybe even European or global perspective.
Yes, as you know, in the report there is a special page on outbound investments, and we kind of had to discuss that it is really important to actually measure how much our funds are doing investments outside the Baltics. And indeed, I see it as a new trend, and I see that for the marketing purposes of our region and our general partners, we have to show that we are able to do good deals in a wider geography. So it is not about only our home market, but it is about a network of entrepreneurs that can operate smoothly from Silicon Valley to Tokyo. So we will continue measuring it, and as we can see, the contribution from these outbound investments comes from several of our members. So it is not just one GP, but many are contributing. So I'm sure it will be a trend. And as somebody here also mentioned that obviously we need also that if there are government institutions like Altums and Invegas, that they support this trend, that they do not put us limitations that we can invest only in say one Baltic country or even in the Baltics. So we have to have free hands to do outbound investments, and that would actually increase the competitiveness of the whole industry.
Yeah, totally agree. Totally agree. And actually, we tried to beat the proven company in Finland. Actually, the company turned out so good that we even were not close to make a deal. And actually, it's again, it's not just willingness. It's just also, I don't know, also skills, how to sort of approach and everything. So it will take time to actually to invest for the companies who just started to do that. But definitely trend is there.
Okay, so what I hear is this is on the table. This is one of the points. It just might take a bit of a time to increase our competitiveness in the regional and European level at least. All right, so I still don't see too many questions in the chat box. Please, guys and girls, feel free to chip in and ask some additional questions. Otherwise, it's just me asking. But again, while we're waiting, one of the things we've seen, and Thomas touched upon it, is that there has been a shift on sources of funding from public to private, I would say. So do you see this shift continuing in the next years, or do you think the proportion will stay more or less the one that we've estimated for 2019-18, or do you think it will swing back to the other way around? What are your thoughts on that, guys?
I think I think the hope is that it will shift, right? That was the purpose of the exercise. But I think the question is COVID adjusted, COVID before COVID themes as well. I think we didn't even touch this topic at all, but definitely on the LP side, it will have some sort of a nationalism effect now of not being able to attract foreign VCs for two purposes. Because if someone is willing to go in a marriage with you in 3 funds, which is 30 years, probably needs to meet you face to face at first. So we're doing good on that end because we can probably be able to invite them, and being one of the only ones to be able to invite them and to meet in person. But on a general trend, not related to COVID, I think definitely the shift is going to happen. I think it's the hardest one of all, probably even harder than participating in foreign deals, I believe, from a GP perspective, because the relationships that you build are usually 5 to 10 years before some of the big LPs, like the institutional, big pension funds, foreign pension funds would commit. Is takes just longer for the learning experience. So if you, let's say we're in fund 1 raising a fund 2, we're already establishing relationships where you have a call and person comes back to you and says, would love to follow you and speak about fund 3. And that's probably 7-year period. till we get back. But the feedback loop and the education that has to happen about the sector, region, companies, or a specific industry that we focus on is a very long process, and it's a super long marathon, ultra marathon, compared to sprints that you can probably do when we set it up, like the first GPs work with the EIF alongside, you know, structural funds. That was a sprint. Now you're coming to like marathon, and then an ultra long marathon with certain like big names. So I think it will definitely take time. It's not going to happen overnight. Probably going to happen as a trend of steady growth for the next, you know, 5 years. But I'm very ambitious and I'm very optimistic about this trend to happen. And eventually we hope that we're going to have 90 or 80% of private LPs in the fund, which are not going to come from the Baltics. And I think that's the ideal setup and scenario.
Yes, so maybe I can add a note from history. So Silicon Valley was basically based when it started on defense industry. If we take Finland, a market close to us and much more developed than the Baltics, so Sitra was a public institution that kind of kickstarted their private equity venture capital industry. If we take Singapore, the same thing. So it started with government money. So I think it is a quite normal stage, and we shouldn't be very ashamed about the fact that still public money is quite important to us. But obviously, if let's say in a coming decade we cannot attract private money, then it means that we have failed. So it's a right start. The public funding is needed to get the industry going, get all these innovative and growth companies going. But say after 10 years, I hope already there is much more private institutional money and also maybe family offices joining the investors.
Yes, sure. And as Rokas said, concerning the limitations, so actually, if you want to be successful, then you have to, you know, be almost without limits, so to say. And if we want to be successful, then we have to somehow to make this proportion so big that we can get rid of many limitations what we have already in our previous funds and in our current fund. So actually, it's definitely difficult to sort of to manage the situation. Actually, so it's must what we have to do as an industry in order to make a good, to show good profits.
A good example actually to make someone in VC world from a fund GP perspective. Andreessen Horowitz raised the first fund. I think I reckon it was 50 or 100 million. Funny fact, it has relation to, I think, Estonia, because despite the fact that they raised the fund to invest in early stage deals, their first deal that they did or second deal was Skype, and they invested in Series B on a convertible debt, which was like something that people don't do in Series B. So, and why did they do that? They did pretty well with that investment, I believe so, given that we know the history of it. But it just shows that flexibility is really what gives you, when you go that ladder of more private LPs, more institutional family office types, because ultimately we're, again, here to make money and make an impact. I think ESG is very important, and I think should be emphasized in multiple ways to be more maybe attain and be at the forefront of this innovation, the next step in sort of venture capital, which is being brought up with different contexts, right? Like climate change, as well as, you know, racial diversity and, you know, gender equality and other topics that I think we can really be at the forefront and be maybe leaders in it and position in it. So I think flexibility is very important. I think I cannot emphasize more and more so, and I agree with Normuds and Christian, you know, and I think with that we can have like flexibility, again, one of the fun elements, but I think there's three things and key pillars that will make us eventually successful, which is investing more in education overall as an industry from a GP perspective, and then also more regulatory rigid frameworks. I think Estonia is doing great. Like Lithuania is trying to catch up. I cannot speak of Latvia because I don't know well enough to comment on that end. But I think these are crucial things and tick boxes that are mandatory for certain LPs. If we don't tick those, we don't even start the game in a way. So these are kind of homework base 0, and then we can move from there with returns and other things that go in line. And I think we're on the right path, but there's still so much work to be done.
We are running out of time, but there's one question from the audience asked by Yevgeny Bolesny from CE Cat Capital. How would you evaluate the level of competition for the assets / companies? For example, number of investors normally participating in the tenders, etc. So assets companies raising capital as compared to Western Europe. So how would you evaluate the differences in the competition?
Okay, so maybe I can start with this last question. Competition is still, I would say, somewhat lower. And the reason is that if we take the Nordics, that is the closest region to us, then their funds are very often geography limited, and they do not include the Baltics. So therefore, many Western European funds that otherwise would compete are not competing. But otherwise, then this is why we see Canadians and Americans and Australians doing the deals here. So for them, they somehow do not seem to have these geographic restrictions, so they do the deals. So we have seen that definitely that the competition has increased, but as long as this geographic restriction for some funds exists, it's somewhat lower.
Yeah, I also can add that, if we take, for example, our previous fund, existing one, we invested in 23 companies. And actually, I must say that only 3 or 4 of these companies were sort of asking for the bid for our competition. So basically, it shows that the level of education for the investee companies are very low, and therefore, sort of we are in a unique situation. I would say not almost without competition, but still the competition is low. But I'm referring here to sort of to more growth stage companies. So for example, Baltic plays in the field of buyouts and actually with a higher investment ticket. So basically, there is a different situation there.
Okay. So if I may, steal last 2 minutes from everyone's time, and with the last question, and Renee, we can start with you. I mean, so what would be like top 1 to 3 takeaways from the survey that we could take and everyone could take and apply it to the thinking for the future to improve our results?
Well, I think one of the things is that in general, I think the sort of private equity and venture capital market is developing, and I think we're seeing sort of a change from many aspects. So I sort of touched on the sort of international aspect where we're seeing more activity sort of beyond the Baltics, but also if we look at the types of investors into the funds, we touched on this as well. It's started with sort of mostly public funding, but it's more and more sort of these corporate investors, asset managers, and as Rokas mentioned as well, these sort of former founders who have now exited their companies and are investing in the next stage, in the next wave. So I think we're sort of seeing a change in the dynamics and the sort of characteristics of the private equity market in the Baltics.
Christian, what do you think?
Well, so Rene said everything, so I do not have to add anything here. So, well.
Okay. Rokas?
I think three things for me would be, I think I'm very happy that we're doing it for the first time, as Christian said, this report, first of all. Second of all, that we're doing this thing, and we have quite a few people here. 50 is not a lot, but probably maybe more people will see that afterwards. So I think what I take from this survey and in general of the progress, more joint efforts. I totally agree to Christian's point before. You know, we as the three countries have a possibility to be on the map. I think very similar to countries like Israel. Very technical talent. I think great ambition. I think trustworthy people in general, hardworking people in general, and you know, very similar geography. Day one, global markets, so have to export all the goods that we produce here, whether that's software, hardware, or products, and really, I think more collaborative and better positioned way. I think we have a very good shot to be not only on you know, Europe's map, but maybe on a global map even. As we said, you know, whether that's, we say, okay, I'm from Lithuania, so I will see the center of Europe is now close to Vilnius, but we are in very position between different regions, and a great location with great talent and a lot of possibility to even attract additional talent from countries like Ukraine and Belarus, which we should definitely leverage upon. And I think we're on a good path. So everything is happy days, but a lot to work.
Thank you, Rokas. Normans, anything from your side?
No, great job, and I hope that you will continue to do a good job.
All right. Well, we were over seven minutes. Thank you very much, guys, for sharing your thoughts and ideas and considerations. So thank you, everyone, for dialing in and taking a look and listening to us. I'm sure you will enjoy the full report as well. Hopefully not before the sleep, but when you'll be able to focus more. But nevertheless, thank you, and see you all soon. I don't know, Paulina, do you have anything to add?
No, you said it all, and I will share the report today with everyone who were registered for the webinar. So thank you very much once again.
Thank you. Thank you.
And enjoying the summer, which is really hot right now.
And I hope next time we do it in person. So
Right.
no second wave.
Agreed.
That would be great. Thank you.
Bye.
Thank you. Bye bye.
Thanks, everyone.
Thanks,
Bye-bye.
everyone. Bye.